Hello, everyone. Welcome to this video. Dedicating this one to one of my mentors who showed me the strategy that he came up with. His name's Rob Smith. People have been asking me on my videos and DMing me, what is the strat? So I'm going to let the man show you himself. God bless Rob's soul. He passed in 2023. Here's a picture of me and him in 2023 when I went to visit him in the Strat Cave, he used to call it. Basically, it was his house in the basement, and he had all these monitors in the background. And I spent the whole day up there. I flew up there to Chicago and got to ask the questions that I wasn't 100% sure on from listening to him and being in his trading room for 2+ years and learning the strategy. And he's going to go into everything here. He's going to explain it well, but it's a little hard to follow because you can't see the mouse. I'll break in some parts and show you what he's talking about. So let's get started.
Clicker here and we get started. So, how many people in this room have no idea what I'm going to talk about today? Raise your hand. Awesome. Awesome. I like to get new people. All right. How many people totally know what I'm going to talk about? Okay. So what we've just done is identified two participation groups. All right. Those who know and those who don't know. Right. So the good part is the second group is about to become part of in the know. Right. So a little bit about myself. So I'm 57. I started on the CBOE when I was 15 years old. And you're like, how do you get a job on the CBOE when you're 15 years old? I'm like, well, when your dad runs Merrill Lynch, it's not that hard. So nepotism's pretty heavy down there. So I started working down there when I was 15 years old. And the first week I was working there, I was in the Texas Instruments Houston oil pit. And Houston Oil had gold in one of their oil wells. The place went nuts. So I'm like, I got a crash course in what fast markets look like down there. So then I came back. I worked summers through high school and college. And then I started full-time in 1989 on the Chicago Stock Exchange. I was a specialist in OTC and listed, which means I was controlling the regional market, as well as an independent trader for myself. So the VROB there, that's a V account is your personal account, and you can see the specialist stuff there and all that kind of fancy stuff. And 270 was my badge number. And here's a picture of me with my friends on the floor. You got JJ up here. Over here, you might have, if anybody who listens to my broadcast, he sits in for me. Well, that's him. That's us. And that's Jim Wynn over there, a buddy of mine. So growing up on the exchange, really, the Chicago Stock Exchange was a bastion of short selling because in those days we had the interfloor trading system with New York, and they had to have an uptick to short. We did. So we could just hit them. So we just had lines of guys who were short selling. So I really never saw such a bullishness until I went to the props field and they're like, do you swing trade? And I'm like, I don't even know what that means. Because on the trading floor, it's take a position. So he's got position. And so we would, have lines of these guys just sitting there and just wailing on stuff. And I remember one time with Jimmy, he worked for one of the bigger guys down there. And he's like, Smitty, you want to short this thing? I'm like, why? He's like, because there's going to be an article in Barron's tomorrow. I'm like, how do you know that? He's like, we know the author. And I'm like, I'm in. So a whole lot of fun down there. So this picture is probably 1997 because I'm standing on the floor. In 98, I became a specialist, NASDAQ specialist down there, but I cut my hair in 96. So I'm pretty damn sure it's 97. And there I'm with my son, headband, ponytail, and the screens. So I've been running 8 screens at least since 1990. So I've been looking at a lot of screens. Now I have 16, and we'll get to that in a second. But let's get to it here about what I'm going to talk about here. Oh well, everybody likes a good horror story, right? So let me tell you my first horror story. So I'm working on the floor. I'm clerking for a specialist, and I'm going to be getting married, right? I'm not even a member yet. I'm just clerking, but I had an account. And the guy I was working for, big position trader. And, he'd probably make money maybe only 5 days a month, but then he'd make it all. He'd be short and doing whatever, and he'd have order flow because he was a specialist. And so the guy next to us, Harvey Kahn, was the specialist in Compaq. Well, this is 1990, right? You know what's going to happen? Eventually, everyone's going to have a computer. This is a big deal, right? Everybody's going to have a personal computer, right? And these guys are on the forefront of it. So Harvey's the specialist, and I'm like, all right, and I'm working for Jim, and I see Compaq going 80, 90, 100, 120. And I'm like, yeah, man, I'm in 120. Yeah, let's go. This thing's, everybody's going to have a computer. This thing's going to be awesome. And I come in the next morning, and on the screen, in those days, there was no pre-market, all right? What they would have is an indication where this thing's going to open. And I come in the next morning, and it says CPQ 8090. And I was like, Harvey, what does that mean? He's like, that's the indication. I'm like, it's opening down $30? And he's like, yeah, they had earnings last night. I'm like, Jim? He's like, we'll just buy more. I'm like, yeah, screw them. We'll buy them some more, man. It's cheap, right? Come in the next day, I'm like, 50, 60. It's down another $30. Jim, what are we going to do here, man? I'm like, I'm almost blown out, and I'm getting married. I barely even started. By the time I blew it out, it was at 36. And fortunately, I had some good capital to start with, but I took a beating. And so Harvey had a computer with charts on it. And he's like, that's Head and Shoulders, that's this or whatever. I'm like, how do you know what that is? And he's like, there's books on it. And I'm like, I walked across the street, I bought every book they had. I was like, I got to figure this. That kind of kills me. And all of them had like an asterisk. Well, nothing works in all markets. I'm like, well, how are you going to tell me what market it is? I'm like, what am I supposed to do? I'm like, so what I did was, for 20 years, I would look at 2,500 to 3,000 charts a day. And I was like, I got to figure this out. And I'm like, there's got to be a commonality here to things that before they move, while they're moving, what they're doing, right? Took me 20 years to figure it out. Took me another 7 to refine it down to what it is, the strat today. But that's how I did it. Just continued immersion of the charts without trying to analyze them at all. I was like, I just got to see them, and something will come to me. So not my first rodeo here, all right?
So I just want to jump in here a little bit. I kind of had the same story here. I spent thousands of dollars through the Market Sniper and all these courses online and all through all these crypto gurus to learn stuff. And they're all teaching the same stuff, and it doesn't work. What works is the strategy by Rob Smith. If you really dig into this, you will figure that out. And that's what I'm trying to share with you guys on my videos I'm posting. You can listen to the noise out there. Normally the 1 or 2% only win, or you can come and watch the 1 or 2% system that wins. Okay? So please continue to tune in, ask questions below. I can post more videos to redefine and show you his strategy better. Here it is.
Around a while, right? I've seen a lot of stuff. So we'll get to it. So we know almost everybody who sets out to trade loses, right? That's pretty common knowledge, right? It's like when you tell your friends, I'm going to start day trading, do they say, oh, you're going to be rich? They're like, nah, you're going to lose. Man, everybody knows that. So there's got to be a commonality to all this losing, because you have to be insane to start into this business knowing what the attrition rate is, right? It's like, I'm going to sign up for Vietnam. It's like, probably not. And there's so much information out there on how to be profitable. How come everybody's so bad at it, right? There's got to be a reason. There's got to be a commonality, right? So there's a famous study in London from 1848 by a guy named John Snow. And what he did was he took this map. There was a cholera outbreak in London, and they couldn't figure out what's going on. They were quarantining everybody. They thought it was being passed in the air. So he took this map and put it down. He's like, what's the commonality of all these people? Commonality? They're drinking from the same well. It's the water. It's in the water. That's how they figured that out. So what would be the commonality of all traders? Everybody. Pretty much everybody, right? Technical analysis. It's got to be the problem, right? That's why this was in a used bookstore. That guy's not trading anymore, right? $4, not bad. It has to be the problem because it's the only commonality that everybody uses, right? So if that's true, let's take a look. Okay, relative strength, moving averages, MACD, any of that, it's a momentum indicator? No way, it's not possible. right? They're lagging indicators, all right? So anybody want to volunteer to come up here for a second? Anybody?
Real quick, I just want to share one thing here before this volunteer comes up. Rob charged me nothing to spend the whole day with him. He was a man of God. He told me how he got the strat when he was in church. God showed him this, and I believe him. But he didn't charge anything. Market Sniper charged me 10 grand. All these other courses, 2 or 3 grand that people are out there paying for. Rob Smith put everything out here for free. All you have to do is dig in. Sometimes people want to make you pay because they say if you pay, now you'll get more interested. Sometimes the free stuff that's out there really works. I mean, we all know it. YouTube's amazing. You almost don't need to go to college anymore to learn stuff because it's all on YouTube for free. So let's watch the rest of this video. Thanks.
What about you? All right? Follow me where I'm going, okay? You follow me. Where am I going? You don't know, right? You're following me. That's a lagging indicator, okay? Also, right? So it's also, they talk about a momentum indicator, okay? This is the formula for momentum. Mass times velocity equals momentum. Do you know what price doesn't have? Mass. It's impossible, right? It's impossible for it to have momentum. It's an analogy. It's like it does, just like when you have a sports team. They really got momentum coming into the playoffs. They don't actually have that. It's an analogy. If they did, you wouldn't have to play the game. They have more momentum than that, they win, period, right? Okay. Fibonacci mathematics. This guy has determined the price could go up, down, or sideways. So the problem with Fibonacci mathematics is that mathematics is an exact science, right? 2 plus 2 is 4. 4.1 is F, right? So if that were true, every move ever could be formulated through Fibonacci mathematics. I'm telling you, you probably can't do it once, right? You got decimals in there, right? You probably can't do it once. So, no. Pattern recognition, all right? Here's the problem with pattern recognition. It tells you that the analyst is only using one time frame to fit their narrative. Because we know if it were this simple, well, everybody would just make money. Like, there's a wedge, there's a that, there's a this. We know it's not true because also it tells you that they're only looking at one time frame. You want to look at least 4 time frames on anything you're looking at, right? Because I can vaporize that pattern by changing the time frame. Also, software is going to present data to you the way it wants. Do you know that some software updates the 60-minute on the bottom of the hour, others updates it on the top of the hour, and those 2 charts look completely different? You want to analyze data. You want to don't try and read a chart. So let's take a look at this guy.
Real quick, just so you know what he's talking about there. TradingView, what I use, does update at the bottom of the hour. So everything he shows you here, TradingView shows you the exact same thing based on the candles when they close.
Weeds here. Over the summer, you basically have this head and shoulders top. Basically, almost. What happens when the head and shoulders doesn't come to fruition, you get a very powerful move in the opposite direction. I think that move's going to take us up.
What the hell? It's like, this is the actually most bearish pattern there is. But when it doesn't work, it's the most bullish pattern in the world. I'm like, you gotta be kidding me, right? You ever known for every pattern there's a corresponding fail to that pattern? You know what that's telling you? It's irrelevant, what you're looking at. The risk-reward ratio. Here's where people really kid themselves. I'm going to buy it at 100, put a stop at 99, and put a sell order at 103. My risk-reward is 3 to 1. No, it isn't. If you had a pie chart of how more likely it is to move $1 than it is to move 3, based on your analysis, it's not even close. Most people have no idea how to gauge their magnitude. And do you know how I know that? You'll have guys say, I think it's going from 40 to 50. And it does, right? And he's going to be the first guy to tell you that. You know, he's also going to say, I'm selling out my last piece at 50. I'm like, you said it was going to 50 and you've been selling? I want to be as long as I've ever been if it goes to 50, right? Well, you didn't know. You didn't know how to gauge his magnitude. He was just talking out his keister, right? The do not trade list. Anybody have a do not trade list? Oh, that stock just has my number. I can't trade that one. I'm going to go trade something else because that one just has my number. But if you have a do not trade list, might as well put them all on there. All right? Price action's uniform. And I know there's different types of liquidity, and I understand that. But when I show you the basics of how price action works, it's all the same. It's just a matter of speed and stuff like that and liquidity.
Real quick, this strategy works on any time frame and any asset class. And actually, this is how my YouTube/Twitter post got started. When I went down there, I was like, Rob, you got to get this message out to the crypto bros. And we were talking back and forth on it. So I came home all excited and like, all right, let's get this thing going. And at the time, his health wasn't doing well. So we just never got to do it. That's why this page is kind of set up here empty forever. But that was my plan. I was trying to get Rob to do a weekend crypto show. The man was so busy, it was just very hard to find time. But I'm telling you, this thing works with crypto. It's super easy. Again, I hope you enjoy this.
Okay, this is more market psychology, losing psychology. Okay, there's an analogy I like to use about the bus. All right, so most struggling traders will go through charts agonizingly over the weekend and come in Monday mornings like, here's my best ideas, right? Here's my best ideas. I'm like, all right, they just jump right in there. And they get two stocks. And one goes up and one goes down. You know what most traders are likely to do in that situation? They're going to sell that winner to pay for that loser and hope it comes back. I want to tell you how insane that is. It's like waiting for the bus, right? And you get on the bus and it's taking you where you want to go. And you freak out, being like, this bus is going to turn around and go the wrong way. And I get off it and get on a bus going the wrong way, hoping that thing's going to turn back around. That's how insane that is, all right? But most people will do that. You want to cut your losers as fast as possible, period. It's not working. And the winners, we want to ride as much as possible and add to them, right? You're right. It's like, why do I want to get out of the one that I'm right in and stay into the one I'm wrong in? It doesn't make any sense at all, but a lot of people do that. So what I do is I invented something called the strat, short for the strategy. So we throw out technical analysis and let's go check her out. So from one bar to
Okay, so this is where Rob's going to explain the three types of bars there are. I'm just going to show you this chart here so you don't get confused on what he's saying. So an inside bar is based on the bar type is based on the previous bar prior. So an inside bar can't break the previous bar's high or low. That's a one bar, an inside bar, the definition of consolidation. And then a trending bar up or down, right? For a 2 down, it couldn't break the previous candle's high, but it breaks the low. For a 2 up, it'll break the previous candle's high, but not the low. And then a 3 bar, he'll talk about once a 3, always a 3 cannot be, or it has to go 2 to be a 3, meaning so they sold this candle down, then bought it all the way back up. A 3 bar, a broadening formation, it takes out both sides of the previous range. So he'll go through that right now.
the next, right? There's only 3 possible things that can happen, or we call them scenarios. So here, here you'll notice this bar completely in that bar's range, right? Couldn't take out the highs, couldn't take out the lows. That's consolidation, right? Not strong enough to take out either side. That's a scenario 1. Scenario 2, you take out either the high or the low of the previous candle, all right? That's a 2. And most importantly, outside bar 3, you take out both sides. That's all that can possibly happen, okay? And so when going back to pattern recognition, the only pattern that doesn't get vaporized by changing time frames is this, the outside bar. That's a broadening formation on a shorter time frame. It has to be. It took out both sides, right? That's one of the most important things you can know, because once you start failing that 2, right, you took out the high. And once you start failing and coming back through here, because we know outside bars exist, we know where it's going. It's going to take out the lows because that phenomenon exists.
So real quick here, this is what he's talking about. So it came up here. It took out the high. Change the color to make it easier. came up. Sorry. So it come up, took out the high. So that's a 2 up because it didn't break the low. Remember, a definition of a 2 up, it breaks the previous candle's high, but not the low. But then it comes all the way back through. As soon as it breaks this outside, the lower part of the range of the previous candle, it becomes a 3. Once a 3, always a 3, cannot be, right?
Right? So we want to have more further evidence about that. Okay? But we'll get to that in a second, time frame continuity. Here's another thing that's very important. There's only based on 1, 2, and 3, there's only so many ways that price can reverse. So we know what reversals look like. So when somebody says, I'm going to buy it on a pullback, we say, no, we will trade the reversal. So one of it.
Hey, real quick, I want to show you on the chart what a reversal looks like because it's a little confusing on the chart. So he's going to talk about a 2-1-2 reversal, a 2-2 reversal, or a 3 bar. But he'll go into it. But this is the only way really price can reverse. A 2-1-2. He'll talk about 3-1-2, a 2-2 reversal in either direction, and a 3. And then, of course, you got these other patterns, which you'll see. And then he's going to go into time frame continuity, meaning you want 4 different time frames going in the same direction, meaning you want them all green, right? So they're all trending in the same direction. So let's continue here.
Is this. One of them is this type. 2 down, inside, 2 up. You go down, you have your consolidation, you have your reversal. 2-1-2. The New York reversal, 2-1-2. The 2-2 reversal. 2 in one direction, 2 in the opposite direction. And the way you can gauge your magnitude on this is you see that these 2 up, 2 down, right? These 2, like I said, we analyze the data. We don't read the charts. Do we know outside bars exist? We do. So these 2 become an outside bar of that.
Okay, real quick, what he's talking about there is these 2 bars here become an outside bar of this. So that would be your broadening formation. So let me clear this out so you can continue.
So we're constantly combining all these things that we know, right? And then we've got the 3 itself as a reversal because it went 2 and reversed back down. Those, if you know those 3 right there, you're good to go. We also have the 3-1-2, but we won't get too much into that, where you have the outside bar, then the inside bar. And the reason that's important is the outside bar means they were willing to pay up and sell down.
So real quick again, here's the outside bar. And then the inside bar is where he's talking about. So when it breaks this, that's when you would get in. That'd be a 3-1-2 reversal to the upside.
Then you get the inside bar where they met in the middle again, and then somebody takes over. But we're not going to too much today on that. Now, how can we further?
Okay, real quick, he's going to go into time frame continuity. Okay, so what he's about to get into is time frame continuity, meaning you want to have 4 time frames heading in the same direction, meaning being green. So if you want to go long, you want to have the hourly, the daily, the weekly, and the monthly, or you could go quarterly, 6 month, year, and get rid of some of these lower time frames. So weekly, monthly, quarter, year, you could have time frame continuity that direction. And it also works when you're going short to the downside. You would want them all red heading in the same direction. So this is what he's talking about with time frame continuity. And then he'll go into what a good trade looks like and what a losing trade looks like. And those are right here too. So let's continue here.
Now, how can we further know what's going on? And when I say 4 time frames, when the higher the volatility, the more likely we are to go down to shorter time frames because when we have heightened volatility, an hourly bar could be like a week or a month normally. We also used macro charts, which I'm going to get to in a second. And so time frame continuity. Here's 4 time frames, right? So with 4 time frames, we say, okay, monthly, weekly, daily, and 60. They're all green. What is that telling me? Remember how we raised hands for participation groups? There's 4 groups out there, monthly, weekly, daily, and 60. At this point, they're taking the offer. They have to be. And when people are saying algorithms are picking me off, no, they're not. They're not. You're getting destroyed by price discovery. In this situation, you have to tell automated trading 4 things, actually 5, how much shares you want to do, but you got to tell 4 things. What do you want it to do? Spy? What do you want it to do, buy or sell? I want it to buy. How do you want it to buy? Do you want it to take the offer or do you want to sit on the bid? When do you want it to do it? For how long? When this condition exists, I know exactly what they told them. They said spy, they said buy, they said take the offer and do it now. That's what they told them, right? We know that to be true. This has to be true, right? We call that full time frame continuity to the upside. So when we can combine these reversals with that, we'll get a reversal against us, right? Then it lines up with the time frame continuity and another reversal in our direction. Every reason to believe that's going to work, right? And you'll see them turn on and off. So if you go to SPY here, monthly SPY, knowing what I just told you, pandemic, 3, all right? Then in here, 2 down, inside, back up, all right? Do we know?
Okay, so what he's talking about is right here, 2 up. Sorry, let me get my, here's your 2 up, then there's your 2 down reversal, 2 reversal, then it went inside here. So as soon as it broke that is where he's talking about you can get back in. Let me clear this and we'll get back to the video.
About that? We did. You also have that 312 right in here, right? So we knew about that. We also have these months in here. That was an outside month. That was an outside month. That was, right? We knew about all of them. We knew about all of them. Once they started going back through the range, we knew it, right? And we had continuity going our way. Not very hard. Plus, when things occur matters, all right? So was this low below the precious 200-day? You bet it was. When was this? That was April. That's a new quarter. That's something I'd want to know about, right? The quarterly boys came in, right? So if we go to here, this is a yearly chart of the SPY. So like I said, it's like if Fibonacci were true, you would have everything ever would be able to be formulated and calculated that way. So based on what I just told you, if you were a fund manager going way back, would you have known about all this stuff? You would. Here. 95, 2, 2, 2, 2, 2 up, 2 back in. Here's your 2-2 reversal in the year 2000. Down, down, and you would have been, continuity-wise, you would have already known you're in trouble there. Here, down, 2, 2, 2 down, but changes continuity here. 2-2 reversal back up. 2, 2, 2, financial crisis. 2-2 reversal down. 2 down, but then change in continuity. See these 3 years? They're an outside bar of all of this. Then you get your 2-2 reversal here, you're back up 2, you would have known by red here to have some caution, right? But you're still 2 in your way up, right? Then you had your 3, and on the 3, you would have had a 2 down here, you would have protected yourself, but then you can know to hit the gas again when you go up there, right? Then we had pandemic, opens here, goes 3 and comes all the way back up. One thing you'll hear me say is once a 3, always a 3 can't not be. If they sold down and paid up, they might do it again. Thus the name broadening formation, which they did. And we knew about that because the quarterly had already turned back to green. They were buying, right? They were certainly buying. And what were they buying? Let's take a look here.
So real quick, I'm going to bring in a chart here and show you Ethereum on the year. So using Rob's strategy, you can obviously see the 2-2 reversal on the year. So as soon as we broke that 2100 area, which I said in some videos and posted, we're in trouble. So we've reversed officially on the year. So now we want to look for one of those reversals coming back up. All this boxes in the background are, this is what I use to show me what the yearly candle looks like. So let's get rid of that real quick. And so you can see even on the 6-month chart, 2-2 reversal. Let's look at the quarter. A 2-2 reversal. ETH's in trouble. Here's the month. We reversed up here at $3,100 on the month. Okay, so real quick so we can get back to the video. If you see here, look what happened in 2020. We actually went down, broke the low like we've already done here, and then came back through by the end of the year. And then the next year was the God candle. So let's hope that happens for Ethereum. So we've got 9 months left on this candle for the year for Ethereum. So let's hope that's what we're doing again. We took out this range. Now we start feeding back up, and by the end of the year, we can take this out and go 3. Normally 3 show reversals, which you saw here, and then we get that 2 God candle up. So let's get back to what Rob's saying here.
Okay. Where are we? Okay, so based on what we know, if you look at Wayfair, look at this. Look at this here. 2 up, 2 down.
Okay, 2 up, 2 down. This is what he's talking about right here with the chart I showed you. You should be able to see it, but here's your 2 up. Here's the 2 down, and when it broke this, that's a 2-2 reversal on the year. That's what he's talking about here. You're looking for those combinations, what we talked about, and flipped up the chart. I recommend go to my page, pull up that chart so you can see these things as he's talking about them on the video.
Just annihilated right after this big 3 in here. Right? Do we know about that? So Wayfair. Here's my Wayfair. Yeah, Wayfair. Okay. Here, when it was recovering, was the pandemic bad for these guys? No. 2 down, 2 up, right in April. We knew right about that. We knew when we had that reversal on the month, we knew about that. Then here you see the 2 up, 2 down, right here. That triggered all of this, all the way back down. You ride them up, ride them down. Rob blocks. One thing, little word to the wise, never in January 1st give your pick of the year. This is Josh Brown's pick of the year. I was like, is it? Because, oops. Is it? Because you see that, there's your 212 monthly. This thing's gotten annihilated. It broke that, and we knew about it. 93.27. This thing's down to $20, right? It's not even half a year. Carvana, here's a good one. This is a yearly chart of Carvana. Look at this stuff. So what do? So I make a macro video of all this stuff once a month. So you know about all this stuff, right? And Carvana, that broke at 194.70. It's down to 46.
So Rob Smith has a bunch of videos on his YouTube page, which I'm going to flash here. And you can search him on his Twitter feed. It's still out here, Robin the Black. You can follow him. His webpage is still out there, even though God bless his soul, he's in heaven right now, looking down on us, saying, he reminds me of the RH of the trading world from the equity markets. The man was a genius. He gave out all his stuff for free, and he was just trying to spread what he believed God showed him. And again, I spent that whole day up there in Chicago, and I truly believe this system is revolutionary, and it can help anyone, and it's free. So you don't have to spend all your money, and this can help the average Joe. I'm going to put the whole link to this video when we're done here in the comments so you guys can watch this. And then if you look on my Twitter feed, you'll see everything you need to know about this strategy.
Right? Good stuff to know, isn't it? How about Netflix? This is a good one. How's the high? That's a 2 up, 2 down reversal in Netflix. And that broke at 640. It's Netflix. Where are you at now? 140. Here's the yearly Netflix. Did we know about that 2-2 reversal? We sure did. Sure did. The year broke at 478.54. So you could already have been in at 640. Does Netflix have buddies? Does. Amazon. What's that? That's a 2-2 reversal on the year. Did we know about that? We sure did. Let's see, where's my Amazons? Anyway.
Again, Rob's just showing you examples out there, and this is why I was trying to get him to start doing crypto videos. Even though he's a genius and he understood his system, he wasn't very good with some different type of charting software. I think he told me he was paying $200 or $300 a month for the charting software where a lot of these screenshots are from. So, yep, here it is.
How about Facebook? Is that friends with Netflix? Sure is. Is that a 2-2 reversal on the year? Sure is. Do we know about that? We sure did. Is that still good? Yep. Now, here, if you go to the weekly, or the monthly here, during this, do you know how many guys came on CNBC calling bottoms? I was like, that ain't bottom, dude. That's going down, man, hard, right? We call that deep continuity. When you have that, you're not turning that around anytime soon. And then you have this, where it tried to go 2 down and come back up. And then here, when it failed and you went here, that baby's going outside. That's going to be a 3. Boom, full time frame continuity to the downside and take her down. We knew about that because here's the weekly. So the weekly goes up into here, makes that slight higher high, and then here in the weekly goes down. Once it goes down here, then I don't know. But I know that these are going to become an outside bar of that. I know that for sure. How about Shopify? There we go. Shopify. And this is a real fun one because Shopify, where's my Shoppy? Shop on the yearly, 2-2 up there. 2 up, 2 down, right? Annihilated on the year. That's what, 1,100, something like that. Or was it? 1,005.14 down to 377, right? Real nice. So, anyway.
I'm going to stop the video here. I'll post it. But basically, he's just going to go into showing you more examples and everything you need to know. But I'm telling you, the strat works and it's free. It works with any time case, any time frame, any asset, and anybody can see it. So if you come my pinned tweet that shows you what a 1 bar, 2 bar, 3 bar looks like, shows you the different combinations Rob talked about, and then this talks about 5 time frame continuity, what a winning trade looks like and a losing trade. And then also you can get these trading indicators on TradingView. And this is the Strat Teacher version 2 that will bring up all these bars until you can understand what they are. That's why I have them on my chart so people can see really quick what a 1, 2, and 3 looks like, and it helps. Then you can tell the color of the continuity. And then the only other thing Rob ever really liked to use was the SAR. I recommend you using Lucid, LUCID SAR, because I think TradingView messed up their code on the traditional STAR by Wells Wilder. That came from Tyler Jenks. That's another man that I looked up to. Tyler Jenks, go out there and look for his videos. Rob Smith, look for his videos. Those are very highly respected older gentlemen that have been doing this for years. All right, guys, I hope this helped you. And I know the market's a turmoil right now, but just get in there and look. You'll be able to tell when we're reversing, and you'll understand what you're doing. You don't need to listen to no guru, and you'll know when good times to buy and sell are. Hey, God bless. I hope you enjoyed this video. I don't like putting myself out there too much, but I feel with the way everything's going right now in crypto, you need to understand the basics of the market here and what these reversals look like and some candle types, and I feel this could help you. Again, keep tuning in, and I'll share this from video to video. I like to post on Mondays due to that's the newly weekly candle, and we can kind of see what's happening from there. All right, until next time, guys, God bless you, and I hope you enjoyed the strat, and please reach out for Rob's mentorship through his old videos. God bless.